Hello, everybody, and welcome to Alternative Interactions. I'm Gary. Today, we're going to be looking at money. Was going to do a money forecast show with Maten. Maten's busy, but we have recorded something very, very special instead. So, what we've done is we've done a look at future dates that could be really interesting with Tarot by Isabella. So that's Maten from Plutonic Planes. And Tarot by Isabella has looked at these dates with a crystal ball and cards. And oh my God, we recorded that last night. So it'll be out later in the week, maybe the weekend. So it's the third today when I released this. And I was blown away by the results on one of those dates. All three dates were good, but one particular date was it surprised us. It shocked us because we didn't necessarily think that we were going to see what we saw and get what we got. So, oh my God, that one's coming up and rocking. It really is a rocking show, that one. Oh my God. So, it's lovely to be able to look at a date and put a forecast to that date. And it's not random dates; it's astrology, human design stuff. So similar to how Maten and I would have done our November forecasts on money, and and we did get enough things right. I mean, obviously we couldn't predict what was going to happen, but we got enough right that made that experiment or that process, that show, valid, in my opinion. One of the big ones was we predicted around the 21st, 22nd of September there would be some kind of major incident with the energies, and Argentina went broke, didn't it? So and had to be bailed out by America. So yeah, we got some pretty good hits on that one. So please do go back and look at those if you want. The 8.1 that we did last month is still valid with all the stuff that's going on in a chronological way of this happened, this happened, this happened, and we're seeing the collapse of the financial system. So fundamentally, what I'm going to be talking about is the collapse of the financial system that we're seeing in real time. Nothing can stop this now. It's gone past the point of return, and what we're seeing is panic. And for those of you that watch my shows, people like Andy Sheckman, Monaco 64, The Market Sniper, and other really good channels. Liberty Finance, who Andy goes on. There's a lot of very good shows out there with a lot of very, very good information that is telling the truth of what's really going on and not the official narrative, the fake news narrative. So, if you really want to learn a bit more about what's really going on at this key point in time, please check those channels out. Now, I'm going to start with something that I've got no interest in whatsoever, and I think it'll become quite apparent why I have no interest in, particularly. But I'm viewing it as in so this is the next bubble, this is the next control mechanism, and I'm talking about cryptos. Now, crypto, I'm including the NSA coin of Bitcoin in that, the Epstein coin. I'm including Tether, stablecoin, the whole lot. As far as I'm concerned, they're crypto and are really quite nefarious and very, very dangerous and toxic to our future. And I know I've triggered many of you now, and you're going to go, "Ugh," but actually, really, because there's things that's happening in the crypto market currently that really have to make you go, hmm. Now, I am a sound money person, and really, there is no such thing as money. It's all agreed upon fallacies of certain things being worth things. And certainly the cash that we have, the folding money or the credit that we have, is absolutely worthless, and it's backed by unicorn farts and leprechaun dust. So when we're looking at crypto, it's just another derivative of real sound money, if that's such a thing. And the only real sound money in this world is gold and silver, palladium, platinum, and even copper these days. Stuff that has intrinsic value and is solid, something you can hold in your hand that is actually has an agreed upon wealth. And technically, it could be that the only thing that you really own, if you've got your own gold and silver in your possession, which you should always have, that is the only thing you actually really own in this world, because you think you might own your house, but actually you don't. Don't own anything. The old WEF, you will own nothing and be happy, is actually not a future prediction. It's already come to pass, and they're just taking the mickey out of us. Yeah, that's the way I see it anyway. Don't pay your property taxes, don't pay council tax, don't pay utilities or whatever stupid made up fake requirement there is. Eventually, the government will come in and take your house off you, put it through auction and sell it back fundamentally to the banks. And you'll be given a small amount of the proceeds back of their fiat currency, which is worthless. So, congratulations. And I'm sorry if I sound quite grim on that one, and it's just like, but it's true. It's true. So, getting back to the crypto market continues to be a very volatile. We're seeing huge amounts of sell-offs in crypto, certainly by the big boys. So they have got the general public to think that it's a good investment and that it's finally becoming mainstream. But obviously, you can't just buy crypto, you have to register and jump through all their ID stuff. And this is one of my big concerns. We are talking about digital ID enslavement via the cryptocurrencies and stablecoin, Tether, Bitcoin, whatever. These digital currencies will come with digital requirements of access on everything, and for you to start paying taxes on your gains of something that's only on a computer screen, zeros and ones, in fact. So, on my last show with Meten, I did speak about how the US government was going to be using stablecoin to offset the debt bonds it can't sell, and it's all a Ponzi scheme, and it's part of their digital slavery system. Because remember, and this is going to upset again, I'm going to be pressing some buttons today, aren't I? But when we look at voting in the USA, you'll need digital ID to vote in the future in the USA. Digital ID will be required for then everything else that you do once you have that, including access to your money. And it's going to happen around the world, obviously, to a certain degree. And the European Union's gone full metal jacket into it, haven't they? Completely batshit. And the, the European Union, the EU, is looking very, very dodgy at the moment. And yeah, yeah. Now, I personally do not believe it, that these things will, they could come into effect, but I don't think they're going to last. Because I think we're going to see the collapse of all the governments around the world, and I'm fairly certain of that. And and so this is really a show to wake people up. You know, we observe, we don't absorb, remember. And although it's concerning, I really don't see us being put into slavery the way that they intend us to go. But of course, it's only on the brink of these things, or once certain things start to bite, that the general public, who are fast asleep at the moment still, will suddenly wake up and smell the roses, or the smelling sorts, and get that big jolt into action. So these cryptocurrencies are very, very dodgy. I mean, Bitcoin is connected to Epstein, NSA, and CIA. And we know what Epstein's major business role was. And, as far as I'm concerned, Bitcoin's always stood for me as baby traffic coin. And you're putting your energy into purchasing that. You're feeding the beast. A lot of people made a lot of money in the early days. Well done. And none of this is financial advice, by the way. This is just observations. None of this, anything I say during this program is none of it's financial advice. It's just observations that I'm making on what's going on, you know. So, if you're going to tell me that digital money is the way forward, which is just another Fibonacci bubble on top of another Fibonacci bubble, you know, it's another fiat system off another fiat system and takes you further and further away from real money. You know, going to tokenized gold and tokenized silver. Yeah, that's going to work, isn't it? Because how do you know that that's connected to anything apart from fresh air? You really don't, you know. And I think all trust has gone with me, certainly. Now, this is where I think all you crypto people are falling down on your face now because you need to explain this to me. We know that stablecoin has got a vault in Zurich with billion, $6 billion worth of gold in it. Okay, so for me, and we've known this for some time, and it could even be more now. It's old news. We reported that several months ago. So for me, it's like, okay, that's a bit of a hmm. So stablecoin was so good, why would they need to use some of what they've created out of the fiat money into real money and buy gold? Okay, but it gets better than that. Tether has purchased more gold than any central bank in the last quarter. That's Q3 of this year. Tether. They bought 24 tons of gold from their profits that they made from all of you lot investing into, the coins, the crypto market. So, a crypto company who's getting everybody to go into a digital system that connects to the digital ID for your enslavement is the biggest purchaser of gold, which is a real asset, in Q3, 24 tons. I think I made my point. I think I made my point. And you can give me whatever rubbish you want on the comments on this one. I ain't having it. I'm not having it, okay? If I don't see any central bank in the world buying Bitcoin, Tether, stablecoin, whatever it is, they're all buying gold and silver, real assets. So are some of the big companies, you know. I'm sure BlackRock are slowly sliding their Bitcoin holdings away and whatever else they are to purchase gold and silver as well. You know, so for me, the crypto market is. I mean, Bitcoin. I don't know if I already said this. I can't remember if I've said this already. It was in my head. Um, Bitcoin has fundamentally, in the last month, lost 30% of its value in a month, while we're seeing gold and silver, certainly silver reaching record highs. And gold, I think, was a few days ago or last week 3% off its record high. So gold's lost 3% in a month, fundamentally, if you looked at it that way, while 30% in Bitcoin. So there we go. Um, For me, it's the big red flag, and I ain't having it. And I've always been very, very certain. Gut feeling, pendulum as well, very, very clear on the crypto was a big no. And it still maintains to be a big no, especially being linked to the digital ID. Now, and it has come so far away from what it was set up. It was meant to be, you could buy Bitcoin or whatever it was, whichever coin it was, and you didn't have to register and you could fly away and it was secret, it was under the radar, no government interference, no tax to pay, no capital gains, nothing, it was all, and now you can't fart, right, whether that's a unicorn one or leprechaun without the government and the system knowing it. How easy is it to drop that frog into the warm water and turn the heat up until the frog's boiling? Well, I'd say you're getting close to the boil mark where the frogs in the crypto market ain't getting out anymore, not without some serious issues and the governments and around the world putting their little grubby paws out for their little cut on something that was never meant to be mainstream controlled mechanism, no different to fiat currency. Now, after that little rant, we're going to go on to something that's really, really important. Um, the yen carry trade. Actually, I just remembered another one that I just need to cover quickly. I'll write that down while it's in my head. Brain like a sieve sometimes. Um, the yen carry trade is unwinding. Now, you're going to say to me, what on earth is the yen carry trade? Well, the yen carry trade is something that's been going on for 40 years. And fundamentally, America, the USA, has controlled Japan's economy to facilitate 0% interest loans via the interest rate of the Japanese government and their debt bonds to allow companies to buy the yen via the debt bonds to offset these onto other things that they wanted to purchase that they could make interest on, like Bitcoin, like other countries' debt bonds that pay a yield of, say, 5% when the yen is paying zero. And so by the time you've done all your moving around, you've made a few percent profit. And we're talking vast sums of money here. And this is what's really held up America for 40 years. 40 years they have been fundamentally screwing Japan to the ground using that. And it's not just America. I mean, the UK and everywhere else has been doing the same. But fundamentally, America is the one with the central currency that has been making hay while the sun shines. And they've made sure the sun's shining. There's no chemtrails, nothing like that flying around. And they've made sure that they've been able to stoke that hay up nice and high. Well, that's now coming to an end because the financial system is has got to that point where we're seeing the collapse in real time. So the yen carry trade is unwinding, and by that what we mean it's the end of free cheap money fundamentally, because if you're borrowing something at 0% interest, it's free. It's free. So what we're seeing is Japan holds, I think, over a trillion, well over $1 trillion worth of US debt bonds. And these debt bonds are coming up for renewal. They always do. They might be a 5 year, a 10 year, a 20 year bond, a year bond. But obviously they're purchased throughout the period of the year. They're not, every month there might be a debt bond sale. So every month debt bonds will be coming up for renewal, if we put it that way. But because Japan is in such deep doo-doo financially. Their GDP's 250%, something like that, and most countries collapse when their GDP hits 120%. So they've been artificially held up by the entire system. We're seeing that because of the high GDP and the high inflation rates in Japan, their domestic yen that's affecting the people, what we're finding is that the 0% interest Japanese bonds are actually now starting to have a yield on them because investors are very nervous about the future of Japan now. And Japan has just gone to a 20-year high on bond yields. And it's just around, it's smidgen under 3%. It might have gone over 3% now. So we're going to call it 3% for argument's sake. Now, if you are an investor, certainly in Japan, and you've got the chance to buy a Japanese bond or an American debt bond, you're going to buy the Japanese one because you're going to get it, it's in-house, isn't it? It's in-house. And so what we're finding is the financial institutions in Japan don't want American debt anymore. Now, this also partly links into the BRICS nations and the fact that any country bar the G7 and Japan could probably, with the Asia trading group that they're in and everything else, they have the opportunity to trade with the BRICS nations. They're closer to the BRICS nations, and the effect of the BRICS nations being so close with the Asia Pacific. I can't remember APAC, a something. I can't remember. I've spoke to about it in a previous show where they've had an Asia Pacific cooperation, and the trade routes are set up, and Japan is starting to trade more with China, more so than it ever has before. So there's lots of stuff bubbling on under the ground, and Japan needs to sort its finances out and can no longer afford to be the whipping boy of the United States. So this is all unraveling. So what does this mean for America? Well, it means American banks no longer have this slush fund that they were playing with, and they're losing billions and billions of dollars. Now, we're seeing this effect on something called the reverse repo. See, I know. I mean, they couldn't make it more complicated if they wanted, and they make it complicated so that we all switch off and don't listen, so that they can carry on screwing us. Okay. Now, the reverse repo is fundamentally at night time, the banks, it's an overnight repo. And what this is at night time, the banks have to balance their books for the next day's trading. But what we're finding is the American banks can't balance their books. So they go into this fund called the reverse repo to borrow money overnight at a low interest rate so that in the morning they have sufficient funds to continue trading. Then during the day's trading, like normally with a carry trade, yen carry trade, let's do this investment and that under 0%, and they can balance their books or certainly take some of the debt off their books by this nefarious yen carry trade. Well, they can't do that anymore. That's stopped. Now, the Federal Reserve has had to step in and very recently has put 13.5 billion into the reverse repo on top of what they already have. And I think it's something like 200 billion from memory. Well, the 13.5 billion that they put in was the second largest liquidity injection into the reverse repos since COVID. And it's looking very much like COVID was to hide a banking collapse with all the printing that went on, with all the reverse repo stuff going on. Although everything has multifaceted reasons, and obviously the 12 dart or 10 dart finish that we're on, 11 dart finish, whatever it is now, that is used to thin the population somewhat. It was also to cover a banking crisis, you know, make hay while the sun shines, hey? Double bubble, two for the price of one. So the yen carry trade, sorry. So the yen carry trade is really, really biting into American banking systems. And the American banking system's already stretched, and we know that the US economy is in terrible straits, regardless what Donald Trump's saying. Was it ninth straight month of recession or decline in manufacturing? We're having car loan companies and car park companies going broke. Three big ones, Tricolour and such like, went broke. I think one of those has been bailed out now because I think it was too big to fail. Because I think the debts were the contagion of that collapse and would have taken out many banks, and that domino effect that we're waiting for would have happened. So they've been bailed out. One of them has been bailed out, but it still doesn't make any difference because and fundamentally the percentage of Americans not paying is at its highest rate, I think, ever. The loans, 30% plus of not, you know, paying their car loans. So, you know, it is very dire, very dire. And one of the things that they're going to try and do is they're going to try and gold and silver, tokenize gold and silver again, obviously, because they've tokenized it in the way with the paper trade. Which they've oversubscribed, hundreds and hundreds of times on both gold and silver. Probably each gold bar is oversubscribed probably by 200 to 400 times, and each silver bar is probably 600 to 800 times with the paper, trading. But they're going to tokenize it again digitally because that makes all the difference, as we know, and create this tokenized system that will make everybody go, oh, well, that's better. But there are big problems to that, and we'll get onto those later. But we're seeing huge stress with the yen, with Japan, and what's going on now. At the moment, it's turning into a three-horse race onto which country is going to cause the financial collapse first. Countrywide. Japan is very well up there, as is the UK, and I'm going to look into the UK properly in another show because the United Kingdom actually has no money. England has no money. Great Britain has no money because Great Britain is a corporation and the United Kingdom is a corporation, but they have no money. The City of London has money, but the City of London is its own private country. And so Great Britain or United Kingdom has no money. That's an interesting concept. So who are we paying our taxes to in the United Kingdom? We're paying it to a private corporation, the City of London Corporation, that's its own private company. And in 1688 was signed over to the Vatican by, I think, James II. But we'll get into that in another show. So that's another little tipster there that so the UK is completely screwed because the only thing that the UK creates, our main industry, is debt. And I'll explain how debt works in that show as well. the debt bubble. And fundamentally, what we're talking here is all the debt bubble. Debt has to be created to pay off the debt of the debt from the created debt that was created from the debt, you know. So, yeah. So France is in deep poo-poo as well. Fundamentally, politically, they were at a stalemate. Things aren't being passed. Um, Macron has really, you know, his desire to hang on to power for the elites is really crippling the country. And also recently, France lost their goose that laid its golden egg for them, and that was the African countries that fundamentally kicked France out and became sovereign from France. Now, for many, many years, France had, a bit like America with the carry trade, fundamentally been stealing the wealth of the African nations it was connected to. And that's now stopped. And so the golden goose has bit its master on the arse, and there's no more golden eggs to come to France. And politically, it's on its knees, financially on its knees, as is Germany, who can't bail them out either. And so it's all looking quite sick, which is why I think the euro is going over to the digital euro, because again, it's a way of creating a bubble out of a bubble of something that doesn't really exist. Another Ponzi scheme, in fact, another fiat currency. So let's just tokenize everything, and we can connect everything then to digital ID and enslave everybody at the same time as the fraudster banksters saving their asses and making a bit more money. Because that's always really important, isn't it, to make a bit more money? But we know money doesn't really exist, so it must be making a bit more gold and silver, or buying a bit more gold and silver. So yeah, we have a very, very sick financial situation at the moment, and anything could happen. I mean, it could even be something like the Cayman Islands with all their Ponzi scheme derivatives and offshore accounts that are holding billions and billions, and how they're doing all their shenanigans as well. It's very, very sick, to say the least. Now, let's get on to gold. Gold continues to be purchased by central banks, large institutions, and by large financial institutions, official institutions that are bankster controlled, bankster gangster controlled. I'm including Tether in that one because you can't buy 24 tons of gold and not be an official, gangster bankster derivative system. Gold continues to be purchased at a pace. China and Russia are not letting gold out of their country anymore. They're hoarding. I think from memory, Russia is got 41% of its assets now are in gold, which meets the BRICS target of 40% backed gold assets. They've also been buying silver, and we're going to get onto silver because oh my God. But gold continues to maintain its price point. It seems to be a very, very, not financial advice, good investment still. It's got a long way to run yet. Okay. We're just having a bit of a pause while all the big boys are, waving their, things around and trying to position themselves to who's going to be first in line when the collapse happens with their begging bowls, and while they still have a gun to everyone's head with the theft of what they're going to do. And that's going to happen. Now, something that's really interesting on gold and central banks, because the central banks are not our friends. Central banks are owned by the cabal, the Zionist cabal, the banks, the gangsters. And all central banks are run by the BIS, the Bank of International Settlement, which is a relatively new financial system that was created for war reparations on Germany and has turned into be so nefarious you couldn't believe it. And the banker in charge of there is Jabba the Hutt, and Jabba the Hutt is the one who's pushing your digital IDs and everything else. So lovely people, go check out an image of Jabba the Hutt, the guy in charge of the BIS. Anyway, we have a very, very interesting situation going on currently in Italy. The Italian central bank, not anything to do with Italy, by the way, it's a private bank fundamentally because it's connected to the BIS, just like the Bank of England is. They can tell you all this bullshit that the Bank of England is run and owned by the government now, but the government is a corporation and the Bank of England sits within the City of London. It's not part of England, not part of the United Kingdom, not part of Great Britain. So it can't be, can it? Anyway, Italy holds 300 billion in gold that's held by the Italian central bank. Now, whether they physically still have that there or not is obviously up for question because we know that the central banks, when they're getting audited, like to move the gold around from place to place to place. So when the auditors come in, there's all this lovely shiny gold in their vaults. And when they bugger off, the vans turn up, they load it back into the van and they take it down to the next bank that's due to be audited. Or if they're forced to cover a delivery to another central bank or an organization like Tether or a billionaire or some kind of, BlackRock kind of nefarious rubbish. But Italy, the legislators, the law, the parliament, if we call it that, they want to take control of their own gold, the gold they own. And the central bank's not interested. So it seems that there's some kind of standoff between the central bank and the parliament. I call it parliament of I don't know the exact name of it, but the lawmakers in Italy regarding that they want their gold back and they want to put it in their own vault. Hmm. But what's very interesting is that the Italian lawmakers have had no and have no control over their own money in Italy and the country. So when Italy is defaulted or we've had hyperinflation in Italy and Italian citizens have really struggled, that wasn't done by Italian parliament. That was done by the central bank at the request of the BIS to punish the Italians in some way or to make a bit of extra money on the debts they create out of fresh air. So it has to call into question every single central bank and every single boom and bust that we've ever had that has been created and done on purpose by the central banks for their masters, the bankster gangsters, the Zionists, our tiny hat friends. So, for those of you who are not aware of how nefarious central banks really are, I think we're going to start to see some fun and games in Italy over this one. It's definitely a story that's worth watching. Now, nearly done, nearly done. Silver. Well, what can we say about silver? Silver has been rocketing prices. It's gone to an all-time high, record high price. And from what I'm hearing from All the people I follow hasn't even begun, hasn't even begun going up yet. You know, we're going to look at a huge breakout. Now, the problem is if it for the banks again, if we get this huge breakout, because silver has been one of the most, if not the most, manipulated, controlled money monies in the world for a very, very long time. I mean, gold's obviously been manipulated. The entire stock market is manipulated. But we're looking at, just had another one thing come in my head, sorry. Um, we're looking at gold, sorry, silver, where a year's worth or so of total mining production can be traded in one day when there's literally no physical silver in the vaults. It's pure criminal activity. JP Morgan, HSBC, Citibank, and many other big banks have got their dirty little fingers in that pie, and that pie is about to bite them back, I think. So, we had a huge, huge thing last week where silver was trading to its record high, and somebody came in and wanted a delivery of silver. And that delivery amount was 400 million ounces. 400 million ounces. I think it was China, somebody in China or China that wanted it. 400 million ounces. They didn't have 400 million ounces because they were trading paper, remember? Promissory notes. For every physical ounce of silver, there's probably 800, maybe even 1,000 bits of paper saying that, oh, you own a piece of silver. You actually own nothing. And so when they went in and asked for 400 million ounces of silver to be delivered, the bankster gangster Zionists turned off the servers. CME, you know, Central Metals Exchange, I think it's called, something like that, which is London and COMEX. It's a Western system. Suddenly, the servers got too hot and shut down, and the backup generators didn't work, and the backup coolers didn't work, and it was down for 8 hours plus, just like that, as if by magic. Other things could still trade, but magically not silver. What that's done is that spook and will spook the entire market. And the big players who think that they own silver will now be going, I think I want my silver back. And there's not enough silver to cover what's been sold. And so we're going to see banks and institutions default. The entire financial system's built on trust. And when you lose the trust, and turning the server off so you can't get something is pretty that ticks the box for breaking trust as far as I'm concerned. You're there. It's done. It's done. Now, I know the Indian central bank has been purchasing silver. I know China's been purchasing silver, and I know Russia has. But silver recently in the United States was classified as a critical mineral, critical to the um, safety of America. And so what we're now seeing is central banks around the world starting to buy silver or what silver's left. Now, We really don't have much silver available anymore. It's gone. Yes, there are silver coins still out there to be purchased, you know, still small silver bars, but we're talking the big boys here. And again, this isn't financial advice, but silver in the last 4 or 5 years has almost quadrupled in value. I think it's gone up 88% this year. In one year, 88%. I think I'm right from what I saw. And it still has a long, long way to go. You look at the ratios, gold to silver ratios historically, and how much silver they get out of the ground, and how much silver to gold ratio. It's around 7 silver to 1 gold. And most of that silver gets used in industry. Sorry, most of that silver gets used in industry. It's huge, huge, absolutely massive. And when silver gets let off the leash, we're going to see banks collapse. We're going to see chaos, and we're going to see silver go to the moon. Silver could go to parity with gold, and gold's going to be going up as well. Because at some point they may have to revalue gold to help nations balance their books, like America, if they even have the gold. Where's your audit, Donald? Where's your audit? So, central banks are purchasing gold. Big gold. So I do apologise. Dyslexia is coming in at the moment. Central banks, they are buying gold, but central banks are buying silver and big silver purchases. They're turning off the computers and pretending they're having faults so they don't have to deliver because they can't deliver. Now, somewhere where they do have silver is the Shanghai Gold Exchange, stock exchange, Hong Kong. And they do have, and they actually, the gold they have is the gold they have, and the silver they have is the silver they have. And so it's not like the same bar of gold is being placed from place to place to place to place like we do in the West. If you purchase gold and you're a big boy, big players, they purchase gold in the Shanghai Stock Exchange. That bar of gold has the asset number scratched onto or etched into it of the purchase number and everything else. And that gold bar is physically allocated to that person or that organization or that bank personally and cannot be transferred or used for anything else. That makes it trusting. That makes it trustworthy. And that means that we're going to see huge, huge sway of movement to China and the Shanghai Gold Exchange for precious mineral and metal purchases because they're above board and will only sell what they have. Now, when we start looking at silver, in the last 3 months, the Shanghai silver holdings in their vaults have dropped by 1,000 tons. Okay, bearing in mind, keep this 400-ton purchase that was required, and they stopped. In the last 3 months, 1,000 tons of silver has gone out of the Shanghai Gold Exchange, stock exchange. That is 2/5 of the total holdings of gold, of silver, sorry, of silver. I keep saying that, do apologize. That's 2/5 of the total holdings of silver held in stock. I would probably say that the Shanghai Gold Exchange, which is why I keep saying gold, which is silver exchange as well, obviously, the stock exchange of Shanghai is probably the only place that really holds actual physical stocks of silver for purchase. Because I don't think it's held as any held in London, and I don't think there's any held in New York in the COMEX. And remember, London is not part of the UK. It's a private country. So it's actually held by the Vatican. London is the banking centre for the Vatican. So we're looking at a huge, again, another huge story of silver going from opaque to clarity on what they've really been doing, these banks to gangsters, and how little silver there is. And when people realize how little silver there is, the price is going to skyrocket. If you don't physically hold gold and silver in your hand, you're in trouble. In the United Kingdom, 1 ounce Britannia coins, 1/4 ounce, and 1/10 ounce Britannia coins are coins of the realm. You still have to pay VAT, value added tax, on a coin of the realm to purchase it, which must be illegal. You still have to pay VAT for physical delivery, but it's not capital gains tax valid, as in it's capital gains tax exempt. So if you buy a silver coin, say for £25 that many have in the past, and that silver coin is now worth, say, £60, the profit you make will be all of yours. If you have bars of silver, then over £3,000, you have to pay, I think, 40% capital gains tax. And I should imagine it's the same with crypto. The capital gains tax will kick in on 4,000 or maybe 6,000 on crypto, and you've got to pay 40% interest on that to the government, 40% of your profits straight to the government. Again, that's why they want you on digital ID and they want tokenized everything, because they can then tax, steal your profits that you're making. So, really, really interesting. Now, one last thing before I do leave is stocks in America and Nvidia. Nvidia is worth trillions of dollars, one of the biggest stocks in the world, and certainly one of the big seven that's holding the entire stock market up in America. Well, they have been falsifying their orders. So they have been creating or working with companies like Grok or AI or whoever for chips, semiconductor chips. And they've been creating orders of 10 billion or 10 trillion, sorry, 10 trillion. And so what they've been doing is they've been putting fake orders out and buying the stocks themselves. So creating a turnaround in trillions of dollars worth of stock, which never actually went anywhere. They're fraudulent. And on my Telegram group, I will be dropping, I think I might have dropped some of this already, but I will be dropping some of this on my Telegram group, some of the stuff that I'm talking about so you can see it, including the Tether stuff. I've got a little graph on that, bits and pieces. So I'll be dropping a bit more on that on my Telegram group so you can see that Nvidia has actually been falsifying its stock or its purchases and sales and artificially inflating its value. It's valued at more than some countries' GDP, one company, and it's been falsified. It's created a bubble. So when are we going to see the AI bubble pop in the stock market and the crash of the stock market? Well, that's coming as well. Full of good news, aren't I? Full of good news. So we're going to be seeing lots of this stuff. So if you have Nvidia stocks or stocks in the stock market, I think you could get bit fairly soon, and it might be worth you. And going again, not advice, but for me, if I had stocks, I would be pulling them, and I'd be put them into physical gold and silver that I could get delivered, or potentially, if you want to stay in the stock market, some of the miners, because obviously the gold mines and the silver mines, platinum mines, not that I don't think there is actually a platinum mine. It's an offshoot of some of the mines, copper mines. I think these mines are going to be tangible and real assets. But again, we know that when it comes to theft, that the government likes to steal mines and take over mines because at the end of the day, it's the only real money. And if you hold those stocks, there is a chance that the governments can come in and compulsory purchase those off you, or stop you purchasing, or hold them, or steal them, in fact. So there we go. So, oh my God, that was a bit of a whirlwind, wasn't it? So yeah, so I'm going to do one on the City of London. I'll give it a couple of days so you can digest this, and hopefully your brains aren't melting out of your ears. And then we're going to talk about the City of London and the shenanigans of all that, and how the United Kingdom and the world has been conned and played by what is a derivative of the Vatican, which is part of the three pillars, which is the Vatican, religion, control, City of London, monetary control, and Washington, D.C., which is the military might and the freedom, democracy via the jackboot. And with that, I shall say goodbye and thank you very much for listening. And I shall catch up with you all very soon. Bye, everyone. Bye.